$50 silver has been quite disruptive to the silver market. But in fact, that's just a result of an underlying cause that has been building up for a couple of weeks now, but in all honesty, really for a couple of years. And now it could lead to a serious dislocation in the market itself. Let's talk about it as we explore. Big things are happening now, and this channel has been talking about it for quite some time, but now, recently, things are coming to a head. We're about to see a serious dislocation in the silver market. I'm going to be referencing several posts by some folks that are quite in the know about what's going on behind the scenes, but it is amazing. You know, before we get there, I want to talk a little bit about what's happened leading up to this, and that's the COMEX and LBMA. Especially the LBMA. You know, I don't have recent numbers now, but we know they have been really running on near empty with regards to how much silver they have in their vaults. It's been a growing problem, but it's becoming normalcy now. But of course, it's been squeezed out big time here recently as the price keeps shooting higher and higher. I reported on this channel about many hedge funds and serious whales in that space making transitioning from short positions to long positions. The shorts are getting squeezed out. And some people refer to that as the silver squeeze 2.0, or maybe even a variation of it, 2.5 or even 3.0, as it's really picked up a lot here recently. And one way we can measure that is the borrowing fees, lease rates. And that is something that has been climbing up. We've seen it go 9%, 11%. Well, the latest post here by Profits Plus ID, Bob Coleman, says that they have climbed up even higher, showing the iShares Silver Trust, the SLV, is under great pressure right now. Indeed, they are. And we are on the verge of a serious dislocation in the silver market, is the headline with a screenshot showing that those lease rates, the borrowing fee, has highlighted skyrocketing, a 14.05%. And who knows, you know, and the trading day is not over as I record this video, but nonetheless, that is something that's going to remain high, even if it goes back down a little bit, but it is skyrocketing right now. And as this indicates, acute short selling pressure and limited share availability for borrowing. And many times it's not available. There are times where others will be injected in there to kind of, as a Band-Aid, but you can't put a Band-Aid on a gaping wound. Many people feel that's what's happening now. Well, I tell you what, physical silver is still available, and some of you can get for fairly low premiums. My friends over at Summit Metals, you know, they sell silver and buy silver, and we're seeing a lot of that happening more frequently now on both ends. The people are buying and selling like crazy nowadays. Taking profits and trying to get in because many people feel that this could be just the beginning of a further spike in silver's price. Now that we've broken through, shattered that $50 mark 2 times now. In fact, we did reach $51 twice now in the past couple of days. It's been an amazing thing to see for sure. Now, how will this end? When will things come back in a normal mode? I don't know. But likely they will. I just don't know exactly when. The other thing that this aligns with the silver prices surging past $51 for the first time on October the 9th, 2025. I also documented that on this channel. That's a 4-decade high. And partially it's fueled by the basic fundamentals of what has led to silver's price increasing over the past couple of years. We're now in a 5th year of structural supply deficit, thin London liquidity, and we're also seeing a premium gap between the COMEX futures and the spot prices. And that gap is backwardation, and that is something we're seeing when the futures prices are lower than the actual spot prices. That's another sign of pressure that we're seeing all over the place. And so it's quite remarkable indeed. Of course, when you look at all of this combined too, there is a mine, and I forget which one it was, that has been shut down due to an accident, and there's less silver that's going to be available. Mining supply is not, there's not enough supply coming from the mines to meet the demand There's less and less primary silver miners out there, but in reality, most of the silver that we get comes from secondary mining. In other words, the metal silver mined is a byproduct of other metals like copper, lead, and zinc. But here's something pretty interesting from the First Mint. There's a lot of people that are saying that refineries are not buying back silver because it's too expensive at $50 an ounce. Well, that's false, and I agree with them on this. Of course, they would know. They're actually a mint that actually produces silver as a mint directly from the First Majestic mines out of Mexico. They're one of the few and only that actually do that, sell directly to the consumer. They're the first mint to do this. It's pretty remarkable, but they are in the know as well too, obviously. So that's not the problem. It's not that it's too expensive. Capital is not the problem. It's the capacity that's the problem, they're saying here. Refineries are trying to get 1,000-ounce bars by airplane. That's very important because most of the silver that moves, it goes by boat because silver is just too heavy to move by airplane mostly, unless there's an emergency. Well, we're in an emergency situation now, and London needs a lot of silver, and because they don't have it, and lease rates have spiked up 89% now. So this is an unusual circumstance, which again has led to the record high silver prices, nominally, by the way. There's still a lot of room for silver's prices to move, but this also is another sign that, folks, that this could be one of those situations, unusual anomalies like what we saw in 1980 and 2011. And once it resolves itself, where will silver be then? Will it go back down to the prices we've seen before this big spike that's been brewing? I don't know. That's a discussion for another video. We'll get there in time as we digest some of this information and see how this thing rectifies itself, if it does. Refineries trying to get these big bars, these 1,000-ounce bars. I don't have any 1,000-ounce bars here. You're stuck with just these piddly little kilos and 5 ounces here to look at. But nonetheless, junk silver, which I talked about that's constitutional silver. I like to refer to as constitutional silver, which already flooded back in the 40s, takes longer to process back into LBMA and approved to 1,000-ounce bars, because junk silver or constitutional silver is indeed the type of silver that is 90% and it needs to be refined, and it takes a long time to do that. I'm encouraging you to hold on to that silver. Don't give them what they're looking for. Hold on to it. Stop the melt by preserving and hanging on to your constitutional silver. I did a video about how you can give away your constitutional silver, but I would encourage you to replenish that which you give away in due course. They're not making any more of this stuff, folks. Hang on to it. Hold on to it. There's something that is magical about constitutional silver in more ways than one. It's history in your hands, and you can get it for a spot price or even less nowadays. So that is something else. Of course, the backlog and trying to get that and process that is part of where the problem is, and that's what they're talking about here. It takes longer to process. So refineries don't want more junk. This is why it's being sold cheap. But we'll take the junk because it's not junk at all. And I think most of us understand that. It is indeed silver. And they are saying here, this too shall pass. And in other words, these are temporary problems in the market that will resolve themselves. But here's what they say won't pass: the infrastructure and metal to support an over-leveraged paper market that suddenly demands physical. That's right, folks. It is now time to get physical and let us hear our silver talk. And our silver does talk because it's indeed a metal that is remarkable, and it is just rare enough and beautiful enough that, hey, why not have a little bit of physical silver on your person? Because there's power in holding wealth outside of the system, and that's exactly what silver does and has done for thousands of years. And so that is pretty amazing. Metal, it needs to be backed up. Real wealth, it turns out, is not paper. That's for sure. Real wealth is physical silver in your hands. And some of these mints around the world, they understand this. And yes, they're in the business of selling physical silver. And of course, my friends again at Summit Metals, they work with a lot of good mints, Scottsdale Mint, as well as Perth Mint and the United States Mint. They deal in it all. And they're one of the fastest growing around there today. So check out Summit Metals, and link is in the description below. But fascinating indeed. Real wealth. It's not paper. It's not any representation of the physical metal. It is the physical metal itself. You know, when you buy an ETF, you are essentially exposing yourself to the price of silver. And to me, why not just get the metal itself? Now, it's fine if you want to leverage yourself and diversify in that way, but I think having physical silver is the ultimate form of wealth preservation, because this thing is a piece of cotton linen fiber, but you might as well call it paper. It's something that is losing value year over year. That's inflation, and that is not going to stop. Even at the best case scenario, it may fall less than 2% a year, but it is going to continue to fall in value. Even though it may be stronger than other currencies, it's like a laundry basket full of dirty shirts. This is the cleanest shirt in that laundry basket. This is silver. It's always clean. It's always there, and it is unchanging. Measure your wealth in ounces, not in price. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.